Monday morning, folks. We're back after a 3 to 4 week hiatus. Sunil and me are excited to begin this new series for the remaining set of the year. We had quite an exciting week, Sunil. There was a lot of financial turmoil from the labor data that came in 2 weeks back and how it kind of shook the markets completely. We saw massive sell offs in gold and silver and then managing to even recover partly in the later half of the week. But broadly, from your conversations with market participants, what has been the sentiment last week and how has that changed over the course of the week up till today?
The one thing that has struck me in our discussions is there's definitely a change in market sentiment. There's a very bullish market sentiment compared to, let's say, even a couple of months ago. And I think the sentiment is driven by two or three reasons. One is people who have already made a lot of money in the stock market have a feeling that maybe the markets are toppish right now, and you should take some money off the table and then put it into a safe haven. I think the second thing is there's a lot of discussion about maybe we've topped out. Maybe you can see even the action of the stock market last week. There's a lot of volatility, and there's a lot of uneasiness. And there will be a Fed rate cut in September for sure, and people are not sure what that's going to create in terms of a if impact on corporate earnings. So the view is that you should start diversifying your portfolio, and that is getting traction. More and more people, more and more banks are talking about, more and more analysts are talking about the fact that, oh, look at gold is going up. And that to me is a change in sentiment, because what is happening is at every dip there seems to be demand coming in, and this is the investor demand that I am seeing. And on top of it, what we're also seeing is that the physical markets, which were a little bit in a shock when the gold prices went up by $300-400, have now come to accept the current price levels. Right. And they feel that, okay, this is not bad. And so, in fact, at every dip, in the recent dip, for example, demand was very good in most of the physical markets. So, we are seeing this three-pronged kind of positive sentiment coming into the market, which I think is going to stay with us for the rest of the year.
You did mention, Sunil, that we're seeing acceptance around these higher prices, and that's something very similar that is witnessed on the charts as well. Let's quickly look into how the charts have shaped up and what it means for gold and
Sure.
silver prices next week. Given that we've been in this sort of a wavish cycle for the past 2 to 3 months after this massive surge in April, there were a few key points that I observed. Firstly, you would notice that there is much quicker ascension to test the all-time highs in the more recent past, which is in the month of July itself. We've tested 2480 twice already, whereas this was a little bit more slowed down and a little bit more tempered back in April when we had first hit these highs, because obviously we had seen a massive run up all the way in March, and so the markets had kind of paused around that time. So you are seeing some latent sentiment there, some latent demand really kicking in and really pushing in prices and really testing these 2480 levels. Of course, there are other aspects that need to catch up to it, which is obviously the Fed, which is now coming around to saying that a September rate cut is going to be possible. Um, that was the first key point. The second point is we are seeing a strong rejection of the 2300 level over here, which is seen as the major support above which gold is held. It is very clear that 2300 has now acted as the floor for all future price increases or all future moves that are going to happen. But at the same time, we're also seeing that 2400, on the other hand, which is around this level, is not really acting as the next floor, let's say, in the next run up of the bullish wave cycle as well. As the prices are increasing, you would have expected the flow to keep increasing, but 2400 has not yet established itself as that fundamental level of support yet. You frequently see 2400 getting breached below and then rising back up as and when new developments are coming through. So I think in the coming weeks, this level will need to be really gauged keenly. Is the market confident enough of the moves that are going to happen geopolitically in terms of the Fed, so that it can confirm this 2400 level as a support and act and use this as a bedrock for future price movement? This is going to be also another piece to watch out for. Obviously, the next move that everyone is expecting is a test of this resistance over here at 2480. To be able to determine that, we do have some key indicators coming in this week. We have the producer price index, which has shown slight drops consistently in the past few months. But more importantly, on Wednesday, we have the core inflation rate coming in from the US. As you can see, both from the month over month and the year over year readings, there's a gradual trend and drop in inflation, which is good, bodes very well for gold. We are expecting to see a continuous drop in the core inflation rate. The interesting thing to note as we are progressing towards the September meeting is that 1 month back, when we were assessing a 25 basis point rate cut, the probability of that was about 85%. And gradually, as we have moved from the 1 month mark to 1 week mark to a 1 day mark, the probability has greatly reduced and has come down to 51.5%. And now markets are opening up more to the possibility of a 50 basis point rate cut directly in the September rate cut meeting. So this is a new development that has taken place, which is we're no longer factoring in 25 basis points, looking at how the markets are shaping up and the possibility of these recession fears also coming up. A 50 basis point rate cut is also on the table. So this is another aspect to note, especially for both gold and silver prices going into the coming weeks. Quickly on silver, silver has sort of really reacted negatively to some of the recent sell-offs that we have seen. But what we can definitely see is this red line over here, which is a 200-day moving average, really acting as the strong support over here to prevent any further downsides. We believe that this support over here is going to hold, and you're going to see a fresh leg up, which will again challenge 29.8 and 31.4 resistance levels over here. Thanks, Sunil. Let's look into how the markets behave in the coming few weeks. But till then, thank you so much and goodbye.